Hello, friends. I'm Giuliano. It's the 6th of January, 2022. It's a Thursday, and I am thirsty. So I have to drink enough water to keep hydrated. I hope you're doing the same. We're going to take a look at Bitcoin price chart. I'm really glad to be here. I want to shout out to Glenn Neely, Neowave method. We're going to use some Neowave logic to consider the Bitcoin price chart. As the title mentions, we're looking at the C wave of the fourth wave, the C wave of the fourth corrective wave here in a Bitcoin price chart. So let me get on that real quick. You're saying, where is this price chart you're talking about? Here it is. It's right here. I'm using getaurox terminal. And with that, I'm going to pop into this loading of a chart layout, which is playing around here. We have this BTC wave-4, the C wave of the wave-4 analysis. Now, this is not guaranteed that this is what we're in. There's also the potential for that triangle to keep playing out. And of course, there's always a potential that this is something different. But I would like to consider this fourth wave potential here of a flat pattern that we could be seeing, which seems to be playing out. And we'll have some ideas of how we know it's playing out or not. Bitcoin price currently trading now at the 43,000 levels. And yeah, there we have it, folks. We are continuing. So, again, shout outs to Glenn Neely, Neowave method. The logic is helping to see the structure of this market developing and to understand things a bit better. Using, just for, if you haven't watched the previous video, you can check back on it, but using this as the significant low for this impulse move. And currently, I'm using this as the first station, wave 1 and to a wave 2, and now a wave 3, a wave 4, with a possible wave 5 coming after that if this all is holding correct and true. So the other thing is maybe this is just a 1 and now we're in a 2 before a 3, 4, 5. Either way, this plays the low. If you want to know why, we can check in the previous video. Instead, here we continue zooming into this structure here. And really, I'm considering market structure, the ideas of market structure. Elliott Wave has really, and especially this Neowave thinking, the logic has really helped, at least for me, to think about the structure of the market and then be able to consider what might be happening and where it might be going, and to understand now the idea of patience required. And yeah, so we see like this is a day after day type of thing. We're looking at a weekly chart, but we spend day after day living our life. And if you're interested in the Bitcoin price chart like I am, then you're here and you're watching this video. And so we're going to talk a little bit about technical analysis if you're interested in that too. And I'm going to get into a bit of this Neowave logic way of thinking. I've taken some ideas from Glenn Neely, Neowave. If you're interested to check more about that, check out Mastering Elliott Wave. So the basic consideration is that we would be in an overall flat pattern here as wave 4. And even if we are in a triangle pattern, then this would still be a C wave regardless, because we'd have our potential A, B, and now into a C wave. So regardless. Now I'm zooming in though into a structure where this would be a fourth wave flat pattern. We would be having some form of maybe, I don't know if it's could be a terminal impulsing, but either way, maybe a first wave extension and then moving into it. So it would be a bit more diagonal and then come out of it. So let's talk about some ideas here in Elliott Wave theory. There are a couple of rules here. There's I mentioned an extension, and then there's the rule of equality. So I'm going to talk about extension rule and rule of equality. And this is basically forming around the idea of impulsive waves, which include 3 trending waves. That would be the 1, 3, and the 5. Okay. And it would include as well 2 counter trend waves, which are the 2 and the 4. They would be the corrective waves. and yeah, the 1, 3, and 5 impulsive. And so in these 1, 3, and 5 waves, there would be one of those waves would be extended. So let's take a look at this extension rule. Okay, and that's basically that the impulse pattern will have a longest wave, either a 1, 3, or 5, and it should be at least 161.8% longer than the next longest wave. So we get some Fibonacci relationships coming in there. And then when the first segment is the longest, the third segment won't. So this was an extra little idea in here. When the first segment is the extended wave, when it's the longest, the third segment won't conclude higher than 61.8% beyond the end of the first, which means that's basically an external relationship of 61.8%. And I see that elsewhere. And so that helps to understand some levels here. You never know the exact level that something's going to be, or you can gain ideas of some zones. And as you can see here with these vertical lines, been playing around with some time axis zones as well, but that'll come in just 1 second here. Because yeah, so the idea here is that there's going to be an extended wave. Now, in this case, in the way I'm counting it, this third wave is extended, and it's actually like 261.8% basically on the daily chart of the first wave when counted from its beginning. And then in this fourth wave here, we're looking at a C wave, okay, of a flat pattern. And so a C wave is also an impulse wave on a flat pattern, okay? A flat pattern, an ABC flat pattern, which we're seeing here potentially, okay? I'm sorry I put this 4 here. Those of you, see, I'm doing this in real time. If you're watching the video, maybe you you already noticed that I put the 5 here, and I hope you're still watching. But anyway, either way, this would be the 3 wave here. So in that case here, the 4 would be ending where the C is, right? Which would be around here. So in a flat pattern, the A wave and the B wave are both 3s. They're both considered a 3 and a 3, which is, why is that not showing? Anyway, it's a 3 is a corrective move, either a zigzag, a flat, a triangle is considered a 3, or even a complex correction, a complex combination correction is also considered a 3. That's a corrective move, and a trending move, an impulse, is a 5. Okay, so the 5 here in this case, we would have a 3. We would have a 3 for the B wave and a 5 for the C wave. So that means this C wave would be some form of impulse of some character. Okay. So that's why we're thinking of the extension rule here, specifically to this C wave. The other rule I want to get into here is the rule of equality. So I hope this is educational, entertaining. I really hope this original error here has been sorted and is not of concern. The error of the misplacement of the 4 and the 5 there, potentially. Having said that, though, yeah, you never know if there is, in some world, this is some sort of weak 5th wave and we are trending down, but we would have to go more into it with trend lines. That's the other idea I like about really a lot about the Neely method. It helps to understand things using trend lines. And so, yeah, we would have to look, and there's possible argument, I'll look further into it. Potentially this would be a 5th wave, but so far the flat seems the better idea based on this original count. Okay, so having said that, whoops, let me undo that. Now, this C wave is what we are looking at specifically, and we'll go into it. The next rule is going to be this rule of equality, okay, and that's in an impulse pattern again, and it relates to the extension rule. That's why I brought it in. And whenever you have an extended wave, okay, for example, this 3, then the rule applies to the other 2 waves, so the 1 and the 5. Or in this C wave instance, we'll find which one is extended, which I'm saying is probably the 1, but we'll see, you never know. The 1 in this case so far, which means the 3 and the 5 would relate to each other. Well, we don't, the 5 would be maybe there, whatever it's going to be, we'll investigate a little closer. But they would have some rule of equality to play out. And that rule is that these unextended waves should tend toward equality in price and or time. So we can look at a bit of time, but we'll definitely look at the price because price is more important consideration than time. And they should relate by a Fibonacci ratio. Again, that 61.8 or 1.618 becomes important. Yeah, and then the rule is most useful in when there's a third wave extension, least useful when there's a first wave extension or terminal impulse, but we'll still use it here in any case and see what kind of relationships we get. Okay, so we're going to use that rule of equality. The other thing here about C wave possibilities, again, like I said, is that it could be we're in a flat or the C wave of a triangle. And if it's a triangle C wave, a flat C, and yeah, so if it's a flat, we're really looking at this rule of equality and extension rule to play around with it. These are a couple notes that I had written. I guess I don't remember what they were about. I might kick myself later for it because I'm sure it had some sort of idea, but don't worry about it. We'll bring those out. Okay, so we are here in this chart and we are going to zoom in. We're going to use the daily price chart to look at these ideas, okay? So when we zoom in on the daily, firstly, I'm going to just keep this centered on weekly. And same thing with this weekly, okay. Okay, we're going to take on that daily price chart right now. So as you see here would be this C wave. If we're looking at it, we'll get closer into it, but I would like to now bring in also that time idea and just remind us that this yellow line is where the A wave plus the C wave is equal to the B wave. The A wave. Yeah. Let's just pull them up. I'm going to show you. Stumbling a bit here. No worries. Where are we? Text, and text. Okay. Rather than have to remember it and fumble through it, here we go. The A wave plus the B plus the C wave is the B wave, and that's the yellow. Okay. The A wave is about 38.2%, the B wave is 1, and the C wave is 61.8%, is this middle color here. I don't know what you want to call this, light, bright, blue, green, turquoise. The big move up here, meaning what I was calling a 1, 2, 3, so the 1 and the 3 wave equals the 4 wave. That would be this purple line here. That's what I've called move up equals move down 1 to 1. That's this purple line here. That's in March. Okay, so the other one previously will be in February, around 7th of February, and the other, the A plus C equals B is end of January, around 24th of January. So those are those regions. And then if we take the longer flat pattern, we have an A plus B equals C, and that's all the way out here in June. So that's still on the table, and yeah, it's definitely possible. Could wind slower as the move winds down, but so far this version seems to be playing out nicely. So let's get into it. You're saying one thing I noticed is, let's just go into the line chart. This channel that builds here, it was interesting how, especially on the, like, you can play with it on the 4 hour. Oh, we don't have it. No, okay, so it was on the day. So on the daily price chart, Let's get right in there. So on the daily price chart, we see this channel created by this potential first wave in a bigger one wave. See how we have the one here for this 1, 2, 3, 4, 5 potentially. So this would have been maybe a subdivided, extended first wave. In fact, if the first wave is extended, it has to be subdivided. That's another thing. So, but looking here at the channel created just here by this wave, interestingly, okay, so it would have been a 1, 2, 3, and then when it's coming down for the 4, it used that as support. Well, in this case, the resistance, because we're looking at from the opposite direction, and came back down. Then when it went for its fourth, for the cleanup wave, which in this case would have been the retracement after the fifth wave, it had a 1, 2, 3, 4, 5 move, and then this is now the 2 wave, right? The 2 wave brought it back to that channel, interestingly. So that's quite fascinating. And not only that, we've also played with it as that next level resistance there. So there you go. That's a pretty fun finding. And here we are back in the original channel that we had mapped out all the way back in. Were we doing this in November? Somebody check a November video and we'll see. All right, doesn't matter. Currently, what I'm saying is we would be in a, oops. Oh, I missed it. What am I doing here? I just wanted to delete this. Currently, we are looking like we are in some sort of potential 1, 2, 3, 4, and a 5 before making to the 4, right? And we'd have to change the degrees on all this. Right, so it would be a smaller degree, and we would also, of course, have that here. And this would be the 1, the 2, and now we're into our 3, which is, oops, please undo that. We'd be into our 3, which we could consider now that this 3 wave, like what does it matter? I personally don't really care where the 3 wave is, where either wave exactly ends up, but it would be nice to know where around is this pattern potentially going to end. That's the main point. Where is this pattern potentially going to end? And so we have this first 1. Now we're going to say we can measure if this 1 is an impulse extension wave here, then we can say that the 3 wave probably won't end more than with 61.8% more than the ending of this first wave. Okay, so we can measure that using this Fibonacci extension tool. Let's do that. So we take that there, and counting this, I called the wave here ending around here, so that's fine. So that's the 1. If we're using closing prices, okay, we're using closing prices. I'm not going to use the wick right now. We can do the wick after if you want. And we'll come down to here and say, okay, potentially the third wave ends at 40,000. Okay, which if we match this up, it could do. If we go internally or go even a smaller degree here into this third wave impulse and find some sort of 1, 2, 3, 4, 5, like what we've shown here, 1, 2, maybe the 3 would be a little bit lower. The 5 would be at the 40,000, right? The 4 might be its resistance, wherever there. That would be that idea. That's an internal relationship. If we take the extension here and use, instead, we take the 1 wave and measure it externally, then the 61.8 is around 38,000. Okay, and that actually is starting to make more sense. So I can give it to that. So we can make a zone though. We can do the internal and the external relationship. The external relationship is around 38,000. Okay, and the internal relationship was around 40,000. So let's make a zone here and say, fine, this third wave and potentially the whole pattern might end around the 40 or 38,000 level. Okay. However, oops, we always got to be careful if I delete the wrong thing. The other option here is maybe that's only the end of the third wave, and where could the fifth wave be? Not only that, the first wave also had a wick down if we look at the candles. So realistically, we could also potentially expect lower prices anyway than this zone. So that's our first zone. If I'm gonna be layering in, I'm layering in here, because if I extend this zone here, it brings me back to some key prices, you know, it brings me back to these resistance prices, okay, all the way. And it also brings me back to this support price here, which is such a key support price in the previous move up. So yeah, I'm definitely seeing this zone as a key zone for turnaround generally. And when we count it this way, wow, that makes some sense. Now, the other option is maybe it goes 61.8%, which is this zone. 61.8% of the one is the three wave, but then maybe the five wave is also going to go beyond that. And in that case, we'll take 38.2% of the move of the first wave and see what that does. And we'll also take 61.8% of the third wave. So we'll take of this move, we will take 38.2% at the end of the, you know, with an internal external relationship here. And oops, we'll also take a 61.8% with if we take the third wave. And let's imagine this to be where the fourth wave ends roughly. I think maybe around like the 43,000 level. Then we can use that as our level to do the internal relationship. And we have a zone here where we could start the external relationship when we're taking the fifth wave as 61.8% of the third or 38.2% of the first. I hope this is making sense. Okay, so we do first wave here up to here, and we take, we know the internal relationship with the third and the external relationship at the 61.8% level. Now, if we were to take the fifth wave, okay, and do to do the external relationship where it ends at the end of the third wave, the 38.2% is around 35 or 36,000, which we've seen before as a potential price level. And if we were to take an internal relationship where we said maybe the fourth would end, which is up here at around 43,000, then that 32 ends roughly where potentially the third would end, which is around that 38,000 level. So this zone here would bring us down to 36. So let's plot that as a potential fifth wave zone. Okay, and we will give that we'll give that some different colors. We'll plop you there and we'll plop you there. Okay, so that's your fifth wave potential. Okay, and there you have that. Now we'll also relate this to the third wave and see if the fifth wave has any relationship at a 61.8% level. So we come here and potentially the third wave would end here. Maybe it would end here. So we'll start it from here and take it to the fourth wave. And interestingly, internal relationship 61.8% would bring it to 38,000. And wow, what do you guess? An external relationship, if it ends here, the third wave ends here, then the 61.8 would be around that 36,000. I hope you understood what I just did. If not, just rewind it and check again. I'll do it again, but I'll do it from the longer point. So this time we'll take our third wave from here, go to the longer point potential here, which is around the 38,000 level, and do the external relationship with that third wave. And a 61.8 is really that low zone here of 32,500 here. So that is definitely a key level here. And so I'm just going to put a horizontal there. And at the same time, I'm going to take, that would be an external relationship. If we just pull it, oh wait, yeah, let me just come back to where the fourth might be stopping us. And again, that 61.8 is kind of in the middle around the 36,000. Okay, you see what I did? I'm basically saying, okay, if we take our third wave and we come all the way, sorry, we only end here, and then we come back, 61.8% is roughly at that level. If we take our third wave and we go further down and we come back, then 61.8% is around the 36,800 level, it says here. Now, the thing is, if we come to this level and we do an external relationship, then I'll show you which level. If we take our third wave to the shorter level and do an external relationship, 61 again is at the 35,855, so around the 36,000 level. And if we take the third wave and go to a longer relationship, a longer third wave, and do an external relationship, then again that 61.8 is around the 32.5. Okay, and we have that line here in our horizontal line here, and we will put it as a line like that. Okay, actually we want to differentiate it from the 886. That red line above it is the 886, by the way, of this move from down here. The purple is the 78.6 and the green is the 61.8. Okay, so there you have it. That would bring us to a 32. I don't think that, well, I don't want to say I don't think that's where it's going to go. These are zones and levels that are potential, but I do see these two zones as the more key levels, especially if we're going to use the time where A plus C equals B, or where we're using this A equals, okay, Fibonacci relationships, where B is 1 and C is 61.8%. Okay, or even this one where the move up from March 2020 lows all the way to April 2021 highs equals the move down, or the corrective move 4. Is, even then that could work here, where the wave 3 ends here, because now we're going to look at time. So wave 3 ends here, we go back up, and wave 5 comes down here. So is 5 going to be here? Is it going to be down here? Is it going to be here? Who knows? But these are definitely good levels to set your sights in terms of, if you're, none of this financial advice, but if you're looking to throw something in and you want to play a game, if you're paper trading especially, definitely a good place to be getting in. And if you just love watching charts and you would like to play along, then yeah, this is the type of stuff that those fancy dreams are made of, it feels like these days. I'm so glad you're with me. I'm so enjoying these Bitcoin price charts. I'm really enjoying using the Neowave type of logic. Now, this is not a strict Neowave method here. We're not plotting the data properly and all that stuff. So now you see how low we're going here. And I think with the addition of candles, you start to see, well, wow, the wick down here on this potential first wave already went down to the 41,000. We could definitely be going down to lows like this if we're going to play. Now let's do that again, where there's also the potential where the first wave, the rest of the move is 1-to-1 with the first wave. So first we'll do that with the line chart, and then we will do that with the wick, all right, as some like major potential levels. So with the line chart, we're going to do the one wave fib extension, roughly. One wave external 1-to-1 would be at 36,000, and the internal 1-to-1 would be at about 41,000. So I'm guessing a fair external is around the 36,000. We've already said that that's a great potential for the fifth wave, and that makes sense. That makes the 1 equal to 1, the one wave, the 3E wave equal to 61.8, and the 5 wave equal to 38.2, and that could be a great catalyst to, as a like a a one first wave extension also allows for the angulation of the trend lines to provide a termination type of a move, where then you can really rock it out of there to start moving into new new direction, if this is really the proper way of counting this action. So definitely share your thoughts, and I hope this is not too tedious for you, but I'm gonna be done pretty soon. I want to just take a little bit more time considerations. I also want to use the wicks. We're going to use the candle wick first. So we're going to go we're going to check the first wave 1 to 1, and that's going to be here. We're going to do it on an external relationship. Oh, that's a time wave. Must be interesting to see my mistakes as I make them before I see them. Okay. And an external relationship, wow, would really bring us down at like a 26K. So is it possible that there's a wick down to 26K? Yeah, but because of the strength of the B wave potentially here on this macro ABC pattern here, this B wave strength being higher than the beginning of the A wave, that means the C wave would probably not go so low. So now what we're going to do, in fact, is do a proper flat pattern channel, where we're going to take the top of the waves and then compare it with the bottom of this wave and say, yeah, there is definitely opportunity for the price to go all the way down to here. It would definitely confluence right here at this 32,000 level, and that would be nicely hit around that February timeframe. We could go around there anyway, could go lower, whatever. But this just shows that using candlesticks, we could get it in that sense. And if we're, yeah, the line chart says the same thing. So we could be closing around these lows. And in that case, we definitely could get a wick down to a 26 level to really take out all kinds of leverage, all kinds of longs, all kinds of scare, spook the crap out of markets. Definitely be possible. But anyway, either way, I think what we're seeing here is a strong potential for this this flat pattern here to play out. It's not guaranteed, obviously, none of this financial advice, but very cool, and I'm happy to be here. I am very grateful for the Neowave way of thinking to help me to think like this, and yeah, you can too. Anyway, that's about it. The other thing I want to do is check some time action. I hope I've covered everything. Either way, I'm going to come back with more, so stick around, subscribe if you haven't subscribed yet, and definitely leave a comment if you haven't left a comment yet. Actually, let's get rid of that and rid of that. Okay. And now that I showed you this channel, I think that's quite interesting. I think we'll leave it there and maybe see what happens with that. Okay, next is time. I would like to bring time into the mix. Okay, Miss Time. Wow, this actually could probably be modified a little bit there and a little bit there. There you go. So yeah, we play nicely into this region. Okay, all right, now what we see here is the 1 wave. So we're going to compare the 3 wave potentially where it would end and the 5 wave too. So we're going to take this time and we're going to do the same thing. So we're going to go, at least here we don't need to worry about wicks on the horizontal scale. We're just checking out the line of where it stops. So we'll start here and say the wave 1 ends here, we said. I guess I should have kept those lines. But anyway, so 1 to 1 with that would bring us, sorry. No, that's the thing though. We got to start at the end of the 2. So that's the difference. That matters. So we're going to go to the 1, start at the end of the 2, the beginning of the 3. So a 1 to 1 with the 1 ends right here in the end of January, which is, here, I'm going to get rid of this for now. this is right on par with the, this date here is 22 January and this date here is 24 January. And so that's quite fascinating in my opinion. Now, to be fair, I don't think I plotted these vertical lines using the daily chart. I think I might have used the weekly chart, but either way, they are close enough. And, the fact is that we don't know if it's going to be one-to-one. 61.8% of this, that could be the end of the whole move, right? Like if wave 1 is 1 in time, then wave 3 to wave 5 will be one-to-one. Okay, like with the first wave, and end around here, around this end of January. Now, if wave 3 is only 61.8% of the first wave here, it would end around January 12th. Okay, so look for January 12th as that potential end of the wave 3. And that's when we'd be around these type of prices here, whether it's as high as 40 or as potentially low as 36, maybe in between at 38. That's the 61.8 is the 12th of January. If we're looking at one-to-one, we're looking around 22 of January. But then we start getting longer time period for the 3 and the 5. And so but we do want to also take into account the 4 wave. So in that case, if the 4 wave, takes a bit of time, and then we're looking at the 5th wave, I guess we're going to have to see. I'm not going to go into the time for that. Let's just focus on this 3rd wave here. And we're looking at potentially 12th of January, potentially end of January. And I'm looking, if this is impulsive, then more like we're looking at around the 12th of January, the latest, for this to be finishing off. That's my take on that. All right. Another sip of water for me, gulp, if you will. And I'm done. I'm going to save this chart, the BTC wave 4 C wave part of the correction. I'm glad to be here. I hope you've enjoyed this. Hope it's not been too tedious, or maybe just tedious enough, or whatever you needed. I hope you got it out of this. And until next time, just going to get rid of that wave. Again, I'm Giuliano, and I am signing off here. Wishing you all love, peace, and happiness. And until next time, goodbye.